All right, so today I'm going to be doing a session on gold, guys, and the first thing I'm realizing is this market is moving sideways or consolidating or in a range, however you want to describe it. But what we could clearly see is that the market is moving up to a certain level, down to a certain level, up to a certain level, just to keep it very simple. So based on where we're at and based on where we're starting, I'm expecting the market to continue to fall, and then potentially, if it stays within the range, to push all the way back up. So now I'm going to start looking for my entries, and because I'm expecting the market to fall down to that level first, my bias is going to be bearish. So I am going to be looking for selling opportunities as this market moves. All right, so let's see. I'm identifying this range, this level right here. We basically pushed up and rejected, but again, I want a proper push up, so I would not take a sell trade there right now. Let's see what the market does. As you can see, the rejection did cause the market to fall, but for me right now, I want a proper correction to a level. All right, so now I'm going to wait for this market to correct. What I want to see is a correction up to the level, then reject, and then I will look to sell all the way down. So let's see what happens. All right, upper the zone, there's our rejection, our bearish engulfing candle at our level. So what I'm going to do, I'm going to sell this market with a stop above, and I'm going to have my target all the way down at the level. All right, so let's see. Again, this is a daily chart, so it's going to take some days, but what I'm showing you all here works on any time frame. So this would have probably taken what, 1 2 3 4 5 6 7 8 9 10 11 12 13. This was at least about, probably could even be about a month, but is the technique behind it. So I'm showing you all this on the daily. It works the same way on the 1 hour, on the 4 hour. So now my bias is going to switch to bullish. All right, why? Because as long as we don't come out of the range, I'm going to expect the market to be bullish. If we break below, I need to see a rejection, a pull back to the level, then reject, and then fall. All right, so for now, we have a nice bullish engulfing candle there. Morning star pattern, I want to buy that, and my target is going to be that first level there that this market could potentially reject at. There we have it. So my target was hit, and let me zoom in a little bit, and what you will see is why I took profit at that level. And this is something that a lot of traders do. So you don't want to just buy the bottom of the range and hold it, because there are going to be levels that this market can potentially bounce at on the way. All right, so I'm identifying my levels here for another potential buy setup. I really only want to be bullish or buy in this market because of my bias that I'm expecting the market to now reject and go back up. So you see we had a rejection there. By the time this candle closed, it will be, it's too close to the range, so I probably would not have taken this trade. But as you can see, the market did go up to the level that I identify again. And now what we'll have to see for me to continue buying this is a break of this level. So I would want the market to break that level, come back, retest, and then continue going bullish for me to buy this market. And that's when you could start looking for the market to go up. But let's see what the market does. We fall all the way back down. You can see we have a potential second buy opportunity here. So I would take this trade. All right, so let me see the levels. All right, yes, so that is a decent level there. I will take that trade. I know there is a level below, but I don't want to risk too much on the trade, so I'll still put a stop right below, but I will be aware that I can potentially get stopped out first before the market goes the direction. All right, let's see. All right, so there we have it. We got stopped out, but we pushed where? Down to the next level that I identified, guys. So depending on what the market does here, I would look to come back in, and as you can see, we missed the trade. All right, but the strategy is what is sound, guys. As you could see, what did the market do? We're moving within a smaller range here, and until we break out, because I want to be bullish, so until we break out of that range, I'm going to stay right here. As you can see, the market is playing within the range. I need the market to break out bullish for me to enter again, or that's when I'm going to look to go up to that next level. So let's see what the market does. Again, within the range. Within the range, we finally broke out of the level. So what do we want? A retest to enter bullish, and then we would look to buy this market. Now, as you can see, that is our retest there, and that is the push. All right, so would we have gotten on this trade on this daily time frame? Probably not, because of how the push happened. But again, once you understand the strategy and the technique, that is exactly what I was looking for. You could go down to the smaller time frame and probably take advantage of this move, guys. All right, so we have the market moving between the ranges there, and that's it for gold today.